Welcome to the presentation of the International Climate Finance Accelerator, the presentation of the winners of our fall cohort 2019, and then followed by a Dragon's Den session where these winners will have first opportunity to pitch their projects. So welcome to the session. Thanks for being here. Can I have the slides, please? Okay, so I'll... Oh, okay, thank you. Slides are on. So the International Climate Finance Accelerator Luxembourg was created in Luxembourg in 2018. Next slide, please. And with the support of the Ministry of Finance, the Ministry of Environment, Climate and Sustainable Development, and 10 private partner sectors supported by the European Investment Bank. So the initiative is a real public-private partnership to support climate finance. Next slide, please. The ICFA sits within the context of the climate finance strategy of the Luxembourg government, and it's the innovation pillar, because we are supporting first-time climate finance fund managers who develop a tested investment strategy within a fund, and they need support to set up this fund and to make it grow. Next slide, please. So the mission is really to contribute to climate finance and to grow the number of intermediaries, to create the future leader of climate finance here in Luxembourg and abroad, to increase the number of investors and assets invested into climate finance, and to establish Luxembourg also as a reputable and credible jurisdiction for not only climate finance funds, because we are already the second fund center in the world, but also for climate finance fund managers. Next slide. So the target group is really first or second time climate fund managers who start their first fund and invest in a strong pipeline of either climate adaptation, climate mitigation, or REDD+. So we cover the whole spectrum of climate finance, and a plus is evidently that if these fund managers consider setting up their fund in Luxembourg, which is a good jurisdiction if you would like to reach European investors. Next slide. The key benefits of the ICFA for the fund managers are there is financial leverage, so there is support for the setup and for during the setup phase of the fund. It gives a lot of visibility, so today is the first opportunity where the fund managers can pitch their project in front of an audience present here, but also in front of a large online audience of 2,000 people, I just heard. It gives the fund managers credibility. As I said, they are first-time fund managers, and so being selected by the ICFA and having this stempel is really already an important quality criteria. And then it's a sense of community. So what we really want to create with the ICFA is a community of like-minded fund managers who go through an often difficult and lengthy process to raise their first-time fund, but at the end they are very innovative and bring an important contribution to climate finance in their various sectors of activity. Next slide, please. The pillars of support. So we provide a program over 18 months. And so it's not a short program. We know that setting up a first-time fund is a lengthy process. It needs a lot of support. That's why we have structured the program over 18 months. So as I said, there is a training program, training workshops that are organized. There is a coaching program. Each fund manager is matched with a coach. There is a financial support in terms of pre-financing of setup costs of the fund and also a working capital loan for the fund manager during this lengthy process. And yeah, that's also giving them pitching opportunities, giving them opportunities to network within a community of potential investors. That's very important. In 2018, we selected our first cohort, and we received more than 20 applications. And at the end, we selected a cohort of 4 fund managers and 1 special award. So the project we selected in 2018 are mentioned here. So it's Empower New Energy, which is a renewable energy fund investing in Africa. Akipeo, which is a agricultural value chain fund investing also in Africa. Ceremus Hydro, which is a small-scale hydropower fund investing in Europe and in Latin America, and Uberis, which is an investment vehicle targeting water sanitation, life improvement, smart tech in Southeast Asia. We allowed a special award to go to the Lightsmith Group for the first commercial climate adaptation fund. And because the idea was very innovative, but the fund was already well advanced and the team was already quite mature and advanced in their structuring process and also in their fundraising process. That's why we granted them a special award. In 2019, we selected the spring cohort, and so there we had Add Value. The team is in the room also. That's a smallholder farmer adaptation fund in Latin America. Terra Bella, which is a forestry and landscape fund investing in Colombia. CIMA in connection with the Clean Cooking Alliance, which is the first commercial clean cook stove fund for Africa. And CAMCO, which is an energy efficiency fund also for Africa. And the special award was granted to Dow Foods. Why? Because that's a very innovative sector. So Dow Foods invest in non-meat-based food production for China. And we all know that China is a huge market. If 1 billion Chinese start to eat meat every day, that's going to be a climate catastrophe. And that's why we thought that this strategy was really interesting. So, and today we are here to announce the winners of the 2019 fall cohort. And for this, I would like to call on stage André Weidenhaupt, Director General of the Ministry of Environment, Climate and Sustainable Development, who will go through this award ceremony together with me. So, that's okay. So we would like to announce now the winners of the fall cohort 2019, who have gone through a lengthy selection process, who have gone through an interview session, who have really showed the qualities of their project, of their team, and who are happy to be here with us. And we are happy to have them all here in the room. And so the first winner we would like to announce is Archipelago Eco Investors.
Photographer in the room anymore.
Okay, maybe we can. There's a photographer which is a bit further away. So you'll come and join us later for the group picture.
Yes. We want you to sit.
Okay, so the second winner, second cohort member for today is Green Dev. Where are they?
already left the room.
Please sit down. Yes. Excellent. And so the third cohort member, the third winner of the ICFA Fall Cohort 2019 is New Africa Impact. Okay, and then we have a special award also this year. A special award is awarded to a team that is a bit more mature already, but they have a very good investment strategy, innovative investment strategy in Asia, Southeast Asia. So we don't see a lot of funds yet investing in Southeast Asia. They are one of them, and so the special award is granted this year to ADM Capital. Okay, so now we have all the winners on stage. Now they are going to undergo a first test because we are organizing a dragon stand session. We have our dragons here in the first row. So we have Stephen Hart from EIB. We have Jennifer Price from Calvert Foundation. We have Daniel Farchi from EIB. And we have Saskia Royce-Making, sorry if I spell not correctly, who is an independent advisor for impact investment funds. So these are our dragons. I would like to call up now the 4 fund management teams, one after the other in alphabetic order. ADM last, sorry, we'll start with Archipelago and then go this way. And so you will do your pitch. The pitch is exactly 5 minutes. So you will be stopped after 5 minutes. And then the dragons will provide you some feedback on how appealing was this pitch for them in terms of investors. How did you give them, you know, the envy to invest in your fund? And so that's a first test for you, where you will see how ready you are to approach a dragon stand and the investors later. So the floor is yours. First team, Archipelago.
Do we have the slide?
Yeah, we have.
Yeah?
There's a little clicker here.
You have a, oh, wow, that's high tech.
That's the right one.
Thanks again.
Yeah, that's helpful. Okay, there we
Fantastic. Good afternoon. My name's Lucy Mortimer. This is Justin Guest. Together, we are the partners for Archipelago Eco-Investors. We are raising Plastics Fund 1, a fund designed to disrupt the plastics economy and decouple the link between plastics, petrochemicals, and carbon emissions. Plastics and CO2 emissions are intrinsically linked. At present, we produce around 300 million tons of plastic every year, which releases around 1.8 billion tons of CO2 into the atmosphere. By 2050, we may be producing around 1 billion tons of plastic a year, and 6 billion tons of carbon being emitted to the environment every year. This is in the order of 15 to 20% of a 2-degree carbon budget. To put this into context, this plastic water bottle, a 500 milliliter bottle, has a plastic mass of 9 grams, but a carbon footprint of 90 grams of CO2, up to the point at which it's filled with water, 10 times its plastic mass. The easy answer is to reach for a known alternative, aluminium cans, for example, but an aluminium can may have a carbon footprint of twice that of a plastic bottle, and that doesn't even look at the other environmental impacts of aluminium production. Our objective is to identify next generation technologies that will reduce plastic entering the economy in the first place and ultimately recover value once its useful life is over.
So, Plastics Fund 1 is designed to be a €100 million Luxembourg domiciled fund. It will be a risk-taking blended finance fund with both private and public sector investors. It will be aimed at identifying next-generation technologies that reduce plastic entering into the economy in the first place. So, for example, approaches engineering plastic out and designing in recyclability into products. The development of new and novel materials to displace plastics. We'll also invest in alternative delivery mechanisms to reduce the need for plastics in the first place. But we will also invest across the supply chain to recover value from plastics that does enter the economy. We'll look at examples such as artificial intelligence-driven sorting technologies, reverse logistics to get plastic waste back to where they need to be utilized, and chemical recycling, be it enzymic, be it solvent, or be it pyrolytic, where waste actually exists. The fund is designed to fill a gap in the financing cycle where we believe traditional financing does not step. It doesn't step in a structured or a focused manner. We think there's sufficient early stage capital available for startup technologies, but there's very little capital available for risk taking at the point of commercialization. Our objective is to support the deployment of models and technologies at the point of commercialization with a view to initiating their growth phase and ultimately supporting them to become bankable. The focus geographically will be Northwest Europe, the UK and the US, primarily because that's where these technologies are currently being developed. We're not investing in traditional mechanical recycling or providing project finance for large infrastructure plants. What we are doing is looking for new, scalable technology solutions and approaches where possible that are modular and may ultimately be appropriate for deployment in the South.
We are a risk-taking impact fund. We have set ourselves targets for reductions across our portfolio through our direct investments of 6.5 million tonnes of CO2 avoided and 8.6 million tonnes of plastic avoided or recycled. We also believe our investments will ultimately have a catalytic effect of a further 15 million tonnes of CO2 avoided and 25 million tonnes of plastic over the life of the fund. We think we can make a real change with this fund. We hope Plastics Fund 1 will be just the first phase in an approach to deploy these technologies, not just here in the north, but in the south, where ultimately they are desperately needed. We hope you'll be as excited as we are about the development of a fund like Plastics Fund 1 that will support a systematic change in the plastics landscape. Thank you. Oh, goodness. Thank you.
Do we do questions now, or how does that work?
You do the questions now.
Okay.
So, thanks a lot for that presentation, for that first pitch. The dragons, what do you think? Who want to go first?
All right, thanks, guys. Very interesting. Hi, Lucy.
Hello.
What was your name again?
Justin.
Justin. Hi, Justin. I won't take up too much time, but what you're presenting, of course, is you're pointing out a gap here, which is precisely this late-stage venture, but it will be very useful for us to know, because ultimately this is about what kind of risk there is on this portfolio, right? A bit more about the projects you're investing in. I mean, would you be investing in building stuff, as in CapEx, or in buying shares in companies, right? And how many deals and how big is this fund? Just to get a sense of the risk versus the number of deals and the size of the fund.
Okay, so the investment range will be probably within the 3 to 10 million euro range. And I'll explain to you why such a wide range in a second. We're potentially looking at between 12 and 15 individual discrete investments. And the investments themselves will go into a range of different technologies across the plastics supply chain. So we differentiate in terms of our description of the plastics landscape as being upstream and downstream, so stealing from the oil and gas industry.
So I just want to highlight, this is the feedback that you get from the dragons in order to improve your pitch next time. You don't need to answer these questions right now. You answer them next time you do the second pitch.
Okay.
Thank you.
Right.
Yeah, and in view of the fact that you're on the venture end of the spectrum, I mean, why do you think that 12 to 15 deals is sufficient to diversify?
Okay, next dragon.
So thank you very much for your pitch. I think it's really a nice proposition. I think, Lucy and Justin, you look really smart, but maybe you can tell your next pitch a bit about your background. So why are you the right guys to source, screen, and select these deals? And also to bring them to market. What are your networks from you and your team?
Very good points.
Okay, Jennifer?
Yes. I loved how you laid out the need, because there's definitely a need and you have a solution. A little bit more about who else is there, and in particular, who is going to scale what you're going to invest to seed. So the corporates, like eventually there needs to be a user uptake here, and just what that looks like. And just what I heard a few times, risk-taking impact fund. Risk can mean a lot of things to a lot of different people. I provide debt financing. You say risk-taking, I'm like, I'm out of here. So just thinking about how some generic words you can put, you can quantify them to really get to what you're trying to say with the use of that word.
Excellent, thank you.
Yeah, nice pitch. I think, and I think this is bang on the sort of the topic that everybody's interested in at the moment. So I think the timing is clearly excellent. I like the fact that you used a prop. I think that's great. And to echo what's already been said, I think it would help people understand if you maybe illustrated beyond kind of a general level, maybe even looked at a specific technology that doesn't have to be one that you're actually going to invest in, but kind of illustrates for people a bit. It allows non-experts to visualize the kind of thing you would be investing in. I would be a little bit cautious about, there was an implication in there that it may be quite broad a focus, and I guess you're coming at that probably because you think that's necessary. That's really where, I think as an investor that makes me a little bit nervous. So I would try and, if you're going to leave that open suggestion of a kind of lots of different parts of the supply chain, try and convince us that it's not all that broad, because if it's too broad in a single fund with a single team, it makes us nervous, I think. I think you also, you identified where there's a financing gap, and just to say that we actually, EIB had a study in a similar sector, and I think identified the same gap, so that sounds about right to me. But
Always good.
But yeah, so I would just try and, along with all the other comments, just try and narrow it down and help people understand exactly what you're going for.
Thank you very much.
Thank
Excellent.
you. That's really useful feedback.
Thanks to the Archipelago team. It's very brave. It's not easy to start. So now I would like to invite the Green Dev team on stage to do their 5-minute pitch. Can we have the Green Dev slides, please? Okay. Time starts now.
Good afternoon, everyone. Thank you for being here. Today we will be talking about waste that rise.
Closer to your mouth.
Hello. Thank you, everyone. Today we will be talking about waste. That's right. We will talk about waste. Waste is one of the major issues our world is currently facing. Like in 2018, the global waste production was more than 2.2 billion. This is the equivalent of more than 200,000 Eiffel Tower. And then in Africa, the waste production was around 140 million tons of waste. This is the equivalent of more than 14,000 Eiffel Tower. Now, with the growing population, the high urbanization rates, and growing middle class in Africa, by 2050, the waste production will triple. This is a major issue. Deo here, he was in Kinshasa. He will provide us insight about the waste issue in Kinshasa in Congo.
Absolutely. A couple of months ago, I was in Kinshasa, which is a beautiful and dynamic city of 12 million people in Democratic Republic of Congo. And it's true to say that the amount of waste being produced locally is a major issue for the local community and for the city. So, in the meantime, when you look at the situation, we realize that there are also a lack of access to the affordable electricity. So as a project developer, I would like to build and create infrastructure that could be able to tackle both waste, but also energy issues. So the thing is, I'm still struggling to collect enough investment to realize my dream. So how could you guys at GreenDev could help me to realize this dream and help this community?
I heard you, Deo. This is a common problem in most of the African countries, and then for energy developer. And then there is definitely market mismatch between capital and then projects. Like investor and then developer, they cannot find each other. It's why GreenDev, we are stepping in to fill that gap. Our approach is multi-stakeholder approach, where private sector and public sector will be working together in order to support you and your community to thrive.
Good news, good news.
To give you an overview about our fund. Our fund is 50 million fund, and then we'll be providing blending finance, debt and equity, alongside of technical assistance, and specifically, we will be pursuing projects with high social and environmental impact intentionally, because our intention is to make impact alongside of commercial return for our investor. And then our team, the fact that our team is focused on one technology that make us as Swiss Army knife of investment. So we have the internal capability to source investment opportunities, assess them, and manage them in-house. And our whole strategy is to bundle all our assets into portfolio, attractive portfolio for investors.
That's really interesting. So how can I get started?
Thank you, Deo. I think GreenDev, it's willing to support you because your project fits our portfolio. But the question is for me and then the whole audience. Tonight, ladies and gentlemen, let me tell you, wealth without value, it's just money. So we should come together and then help Deo to help his community to move forward. So tonight, if you feel the same energy that I do, tonight, if you feel the same passion that I do, if you feel the same urgency for the climate change, let's help this gentleman and then his community to build their project. Thank you, everyone.
Thank you, John.
Wow. Just in time. Excellent. The judges, what do you think? A very different pitch from the first one? What is your feedback?
Yeah, I mean, first of all, difficult not to like the kind of dialogue style and very, very, I think, appealing pitch. On the other hand, I think given the short amount of time, then you have to bring that round quite quickly to what you're proposing to invest in. And honestly, I got to the end of the presentation and I wasn't quite sure. So I think it's really important to especially when you just have a short amount of time, to cut straight to the chase on that. So just, you mentioned on one technology, but then there's a sort of, looks like a long list. So I wasn't sure exactly what the investment focus was. So that would be my suggestion.
And I love the beginning with the Eiffel Towers. It really helps crystallize the immense problem, and then the growth and how it's growing. That's just fantastic, I find, to really compel one to think about their investment dollars having a sizable impact for a huge problem. Echoing at the end, how Green Dev Impact Investment Fund, so that green box, give me more. I want to know more about geographies, how you find your investments, what they look like, and not in great detail, but enough so I know what that green box is. And so echoing my first dragon to my right, what I'm investing in.
Thanks. I mean, waste is a funny old sector. There's an expression in English which is, where there's muck, there's brass. There's money to be made from rubbish, right? But it is a funny old sector, and where it works because of people kind of had good behaviors. You know, they don't just throw it in the ditch and so on. So in this case, I think it'd be really important to say how you select the people that you work with as reliable partners, even reliable countries. You know, what are your criteria? Because, you know, without, you know, a great counterpart, maybe without, say, enforcement, it's very difficult to make waste work. So try to describe exactly your choice of geography, counterparts.
Yeah, thank you very much for your pitch. I really believe the need for this solution. I think it might be challenging, so I'm not an expert, but I have some questions. So if you look at the different elements you touch upon, I think it's also good to provide more examples and how the revenue is made or the profit. So waste to energy, I believe you can transform it to energy provided to the grid, right, if you recycle, but then you compete with solar. So how is the waste recycling to energy competing with solar? Recycling, I think most of the waste in developing countries is of organic, so there are not often available materials to recycle, but you might know more about that one. SMEs, I think sanitation you address, I think is a really impactful sector. I think it's hard to make money in that one. So there you have several circular economy models, like transforming the waste into flying foods, so and provide chicken feed, or organic fertilizer, but then you compete with the subsidized chemical fertilizer. So there are a lot of questions there as well, I think really impactful. And with public sector, you then need some budget so long, Brad, to get these contracts, right? Then you talk tenders, then you really need to have some, maybe a grantor to provide your working capital to get these tenders in. So I think it's really addressing a need, but maybe also share a bit more about your partners, with whom do you work? There are a lot of multinationals out there that have interest to work with you in the field and can work together with you. Maybe you look into an outcome payer model, where maybe some international NGOs might pay you for outcome you generate. Or is there an exit? So is it business? Is it a design, build, operate, transfer? I don't know what is the model behind. So and also how to source and select what kind of investments and the size. So I think it's really powerful. I think really needed. Thank you for working on this, putting effort in this. But yeah, excellent.
Thanks a lot. I find we have very constructive and nice dragons tonight. Excellent. So, Green Dev team, a big applause for you. Now we come to the third pitch, New Africa Impact Fund, Clean Energy Fund, sorry.
Hey, I'm here on behalf of my 5 partners to talk about the fantastic bioenergy potential in Africa, the modern bioenergy potential. The IEA is targeting 8% of electricity coming from bioenergy globally. In Europe, it's 3%, globally 2%. In Africa, it's approximately 0.2%. That's not because there's no bioenergy in the energy supply chain in Africa. There is more bioenergy than anywhere else as a percentage of total. However, there is no modern bioenergy, very little of it at least. We have identified more than 20 potential sites where we can build bioenergy plants from wood. There are 3 main sources. We are also focusing on waste, like my friends here. we are waste to energy. The potential is sugar, which is to some extent explored. It's palm, which is explored extensively in Southeast Asia, not so much in Africa. The only bioenergy plant in Ghana is a small palm waste to electricity plant. And then you have the easiest way to expand the bioenergy potential and generation in Africa is based on wood waste. Our team has 150 years experience from Africa and from bioenergy globally, and we know the biomass owners, the forest owners throughout the continent. I think more strongly than maybe anybody. There has been a fantastic development of renewable energy and in the renewable energy industry over the last decade. Wind costs have come down, prices have come down, solar the same way. Unfortunately, not for bioenergy. The bioenergy costs, capex, have been more or less stable in Europe, maybe around $4 million per megawatt. One effect of that is that most of the bioenergy in developing markets now are used for heat, not for electricity. In Africa, there is a potential and more need for electricity, so we will focus on electricity, but also generate heat for the industrial facilities where we will co-locate these plants. We will work on very standardized plants to reduce the cost. The cost of building bioenergy plants has to come down to provide sufficient return and to compete with the other renewables. Our target is very much to focus on that by doing standardized plants, coming up with simple solutions, and to benefit from a platform of bioenergy plants with a target of about at least initially $2.5 million per megawatt capacity. The biggest risk here is the feedstock. It's with all waste-to-energy based projects is the feedstock, unlike other types of renewable energy. We will mitigate those risks by working with forest owners, with processing plants, and that is an important competitive advantage with our offering, is that we know the people who have established forest plantations around Africa. It will all be sustainably grown, and none of it will be from natural forest. Bioenergy is very much distributed power. It's the plantation forests are in the most remote and deprived areas of these countries, like it is in most countries. So it is a huge effect on the electricity supply in these countries. The impact from bioenergy is probably higher than from other sources of bioenergy, for the simple reason that O&M costs are 40 to 50% of the total cost, unlike wind and solar, which has much lower O&M costs. To tackle and explore this opportunity, we want to build a bioenergy fund. I'm watching the time. I'm watching the time here, Corinne. Awesome. Our target is to invest in plants with about 15% ROE each, maybe a bit higher. We are developing a couple of plants towards financial close, and equity investor want 18. Our target is up towards 10 different investments, with hopefully $100 million offering in total. Thank you.
Thank you. Excellent. So, the different investment sector, what do you think?
Thank you very much for your pitch. I think maybe it might be good to compare things with solar. More investors are known to solar, so if you make tangible comparison what you do versus solar, they might better understand or relate that to their current expertise. Because investing in an industry you don't know or your technology that's new is sometimes hard. So relate maybe also to solar that's more known. Yeah, and also the question about the team, how to source, select the deal flow, where they come from, how you work with governments, might be a relevant question.
Excellent. Excellent presentation. I'm sure if you had more minutes, you could probably tell some more things. But in the same vein, I guess, again, coming back to geography, because clearly, you know, we say Africa several times, but that's a continent, you know. So I'm sure there's some countries that you're looking at more than others, and again, the explanation why. I think that would then bring out several factors, right? That there'll be a way of telling that story. I think also just, you know, exactly what kind of project arrangements are we talking here? Is this like build, operate? Will you be in charge of operations, you know, 10 years, 15 years, 7 years? Is this equity, or is this debt and equity, or whatever? Just some details. I'm sure you could have included that also, just to get a bit more substance on that.
So you got my money to invest. So this is a little bit on yours. I felt full comfort in your expertise and experience building these plants and making them more efficient. My questions were all, how do I realize my return? So you know, I'm assuming it's equity, but who's taking me out? The PPAs, how do you build and maintain? I felt like you could build these, and that was great, but I want to know how I get out. Well done.
Yeah, to echo everybody else, I think it was really good. It was a pretty comprehensive pitch, and probably some of the gaps we're identifying are just, you didn't have time. You talked a bit about the pipeline, which I think was helpful, gave us an idea about what kind of projects you're talking about. And I also like you identified the feedstock risk, because obviously that's the big one for bioenergy. I would have liked to hear a little bit more about how you're going to deal with it, other than knowing the providers. I think also, is that contractually, how are you thinking of addressing that huge problem? And a similar problem that I think you maybe didn't identify, but you could talk a little bit about, is I'm assuming, you didn't say explicitly, but I'm assuming that the offtake for the energy is the local distribution companies. And obviously that's in many countries, and that's also a big risk because there's a liquidity concerns there. So I maybe would speak to that a bit. And then I also just wanted to say I liked also that you addressed some kind of overall statistics for the fund, what you're thinking of in terms of returns. I do agree how you get those returns was maybe a little bit missing, but the general statistics, where you're heading for, I think was very helpful.
Okay, helpful feedback. Huh? Good, thank you, Dragons. Now the last project, Ian from ADM Capital.
Hi everyone, good afternoon Dragons. My name is Ian Henderson and I'm here to present the ADM Capital Asian Climate Fund. There's an ancient Chinese proverb that says the best time to plant a tree was 20 years ago and the second best time to plant a tree is today. From a climate change perspective, Southeast Asia would have benefited tremendously from real or proverbial trees planted 20 years ago. There's a long version of the story of why the region is so exposed to climate change, but the short version would touch on vast and growing populations that rely on stressed natural resources. It would speak to the reliance of many economies on environmentally sensitive sectors such as agriculture or fisheries. It would talk to the vulnerability of coastal populations to sea level rise and increased natural disasters, increased intensity and frequency of natural disasters. Many things need to happen to address these threats and also to unlock the opportunities which are the flip side of climate change. But one of these is scaling climate finance. Scaling climate finance in Asia is slightly different to the challenges you face here in Asia. The demand for medium to longer tenor finance is the same, but the supply is scarce in Asia. There's a bunch of reasons for this. The dominance of banks with deposit-driven funding models, the lack of a single currency, regulatory issues. There's a whole range of issues that prevent the supply of long-term finance to sustainability projects. I work for a firm with decades of experience drawn from being based in Asia, investing in Asia, and working on sustainability in Asia. It's from this vantage point that we see the many issues that stem from the use and often the abuse of land. I think we all know in this room that the land use sector has above average potential in terms of climate and livelihood benefits, but below average access to finance. You're probably all aware of the figure that the sector contributes anywhere from 24 to 37% of global greenhouse gas emissions, yet only receives 3% of climate finance. Many enterprises in this space are considered too risky for domestic players or too small for local ones. For this reason, they can struggle to pivot away from the traditional business model where you transfer natural capital into financial capital. And this mechanism is as old as the hills, but the rules of the game have changed, and we need to change how we deal with land too. We feel at ADM Capital that we're in a strong position to deal with this. We've been investing in Asia for 20 years. That puts us in a very small club of funds that have weathered the global financial crisis and have proven processes to manage risk. Thematically, our knowledge of land issues runs deep. It was our experience and networks that gave us the confidence and the credibility to launch a sustainable agriculture private equity fund in 2016. Sustainability is in our DNA. If you went back 15 years ago, you wouldn't find a single other fund in Asia with a foundation like ours. If you went back 12 years ago, you wouldn't find a single other member of the PRI in Asia outside Japan. It's these aspects of ADM Capital, combined with a diverse and balanced team, that creates a culture that we feel is very important. The management guru, Peter Drucker, made a remark that culture eats strategy for breakfast, and we feel this culture enables us to do and think differently. So we think there are opportunities in this very challenging space if we do things differently. And thinking differently involves harnessing new technologies to buy down cost curves and to improve perceptions of risk. Thinking differently involves new partnerships, new business models, new financing structures. Thinking differently also involves the humility to know that we don't have all the answers, and we need the help of people in this room. Our Asian Climate Fund focuses on early stage, medium to long term, US dollar private credit transactions. We will focus on the sustainable land use sector, initially in Indonesia, and then branch out into other countries in Southeast Asia. Key to our business model will be partnerships, but also a technical assistance fund through which we can deliver blended finance solutions, but also de-risk projects at the transactional level. We aspire to do several things through this fund. This includes developing proof of concept by developing new, sustainable, scalable business models. And we also hope to inspire the Asian investment management industry in a small way. In order to do this, we need to adhere to the words of the ancient Chinese proverb and start planting trees today. We know it won't be easy in this sector, but we're thrilled to be able to be here and benefit and support the ICFA, and that's why I'm here today. So thank you.
So, what do you think?
That was a very, very polished pitch, and I think was great. Carried me through from the start to the finish. I guess I would only have one comment, which was at the end I still wasn't quite sure where you're going to make money, and as an investor, obviously that's pretty critical. Yeah. I would. You set the scene incredibly well, and I think really well laid out your experience as a firm and so on. I would have cut a bit of that and talked a little bit more about the investment strategy.
This dragon, I'll recuse myself because we invest in you at Calvert Impact Capital, so I know too much. Okay. So I will pass it.
Fair. Yeah, I mean, I'm not sure what I'm investing in, and I would say it's not that we don't receive, say, open strategies, but then usually they're compensated by identifying very precisely who the people involved are and what their track record is exactly. You know, this was a good speech, wonderful, but you need to tell us what we're investing in. So.
Yeah, thank you very much for your pitch. Really, a lot of available content. I like that you translate the need into an opportunity. That's really key, because a lot of needs in these areas, and needs are not necessarily investable. So if you translate it to an opportunity, that was really strong. I also like your examples on how technology will reduce the cost and reduce the risk. Questions, same here, an example investment, what do we talk about? And maybe also partners on the ground or other organizations you work with that increase your profile. But well done.
Great, thank you, Dragons.
Excellent. Thanks a lot to the Dragon stand. Please remain in the room. Thanks a lot to our ICFA winners of today. Can we have some pictures of all of us and also invite the Dragons to the stage for a picture? That would be great. Okay. Can we have some music at the same time? There was music, so where's the music? So thanks a lot for participating. This session is now over. We are on time. And the winners may stay with me for another second. Thanks to the Dragons. See you all.